You're going to have a lot of commercial deals, especially in the next, 2 to 3 years. If these rates don't adjust, you're going to have a bunch of opportunity in commercial where investors aren't going to be able to afford their asset any longer, and they're going to have to sell at a loss. All right, so we're gonna react to something Mason just sent me. I've never seen it before. It's a blind reaction from Yahoo Finance, cities where home prices are dropping the most. There's definitely places where stuff's dropping right now, for sure. However, I have a feeling, I'm guessing, I have no idea, that maybe this guy says some stuff that's kind of like fear-mongering in regards to the market in general, but I don't know. Let's watch it, and I'll give you guys my feedback on what I think as an investor should actually be being focused on. Cool. Let's do it. Yahoo Finance Live.
Not beating inflation yet, but they are winning the war against an overheated housing market. Today,
not beating inflation.
Numbers showing mortgage demand slowing yet again. Mortgage applications decreased 2% from the prior week. That's according to the Mortgage Bankers Association.
I could believe that. 2%.
6.81% on the 30-year, the highest.
A week ago, it dropped down as low as 6.5%, but this is 2 weeks ago.
Down 86%.
Refinances are obviously down. There's no reason to refinance right now. So far, it's actually not bad. So far.
Realtor.com out with these 10 cities where prices are falling the fastest and topping that list. Awesome.
Palm Bay, Austin, Durham, Denver, Ogden. I can't see it. So all the places that are showing right now are individual, like places that actually had these massive booms, and prices just got skyrocketed because of the small bubble that those cities had themselves. So it's only natural that when rates go up, those home prices that were selling for 1.2 million previously are going to end up going to be positive. Stuff that was selling for 1.2 million before is now trying to sell for 1.6, and with the increase in rates, essentially, like for example, if you were $1 million buyer and that was like what you were buying last year, this year you're a $600,000 buyer just because of interest rates, right? And so there's this weird time in the market right now where somebody who wanted $1 million home and wanted to be able to say they have $1 million home is now having to sacrifice for a $600,000 home, which is weird because now the $600,000 home have to adjust to being a $1 million home from a quality perspective, or it's going to make those homes not get purchased, which is going to make that bubble even weirder. I don't know. It's definitely a really weird time, but I'm not surprised by those specific locations.
Certainly is some overlap, notably Phoenix, Austin, and Denver, but most of those cities were in Florida, where prices are not falling that fast because we're still flocking to the tax rate.
That's also actually an accurate point, right? If you notice, like a lot of these areas, people in the last recession, a lot of Florida got hit really, really hard, especially like Jacksonville area, Tampa, and our metro cities. And this year it's different because it's a lot more political than before, and so because we have so many people moving into Florida, notice Tennessee's not on there as well. When Tennessee's having an insane, Nashville has this massive bubble happening right now, and many other cities inside of Tennessee. But because of the political benefits of being there, it's maintaining that market because people really don't care. The people that are leaving California and some of these other cities that they don't agree with their political, the agenda there, they're moving to these other states and cities, which is stabilizing that market, which only really delays the inevitable potentially. But as of right now, we're still in the clear and still making money. So.
Citadel, they're calling it Wall Street, South Beach. A lot of people still keeping those prices high.
Yeah, there certainly is a lot of demand in Florida. We talk about this cooling housing market, and it's very important to point out, even though Wall Street has been lowering their expectations, for example, Morgan Stanley saying that home prices are going to drop between now and the end of 2023 by about 7%.
This girl seems like she's really intense.
That puts us right back to where we were at the start of this year, January 2022.
And this guy has really good posture as I'm sitting here leaned over. It makes me feel like I gotta.
We're starting to see a slowdown. Demand is starting to fall off a bit. A lot of that has to do with the higher mortgage rates that you were just referencing. But it's important to point out, Rochelle, that on a pricing basis, we are still very elevated when you compare it to what we were seeing pre-pandemic.
And as Dave was mentioning there, it is a regional issue. Obviously, a lot of the places that we saw that were really thriving during the pandemic as people wanted to be warmer, and we also had people working from home, wanted some options. It's interesting though, because different parts of Florida are sort of coming back at different paces. And then when you also look at some of these other big bank predictions, you mentioned Morgan Stanley, also Gold.
Different parts of Florida coming back at different paces, and really in general, because of the pandemic, people working from home, people not wanting to be in the city, what happened is a lot of people that lived in city left the city. A lot of people that were moving into Florida or moving into other states didn't move directly into the metro markets or the cities. They moved into the outskirts of the metro markets in general. And so you're seeing what's happening because of that is you're having expansion in general in areas that didn't have like new construction and like gaining new construction now because there's a demand for that like 30 minutes or 45 minutes outside of towns, which before were just, not swamplands in Florida, but like we're not places people would want to live because this is the Bodong areas, right? But now it's kind of like desired areas to be a little bit further away from people just because of fear or whatever else.
Goldman Sachs saying that they expect home prices to fall between 5 and 10% next year. Wells Fargo putting it at about just over 5% as well. But then,
even if this does drop, I'm not one to predict the future and the percentage drops. I'm not smart enough for any of that. I don't really care how much the market drops at the end of the day as an investor, and I'll wait to summarize my points on that later. But point being is that our market's up more than 7, 5, or 10% from what it was at the start in many locations. And so even if next year they drop down, before, if we were growing 2% a year or 5% a year, if we grew 20% in the last 2 years and we dropped 5%, we're still up and we're actually just back on track, right? However, because of pushing money into the market, it did cause the inflation because of interest rates. It makes it feel as though there was this weird thing happening when in all reality, we're just stabilizing based off of where we were. We're not dropping any lower, because we were never as high as we should have been. And so we're really just kind of stabilizing and finding our happy median. So did the interest rate hikes make this happen? Yeah, probably, yeah, of course. But did it do more than it hurt? I'm not quite sure. Again, I'm not smart enough for that.
when you look at Zillow, they're actually expecting prices to go up. Now, I'm sure they're hoping that's the case, given that that's the business that they're in. But the big banks are expecting some cooling in the market. And so if you're a first-time home buyer or if you got stuck in a very expensive rental, at least perhaps some good news, but you're going to have to wait about a year for it.
Yeah, look, people think we've got a lot further to fall. Mortgage rates will climb above 7%. We could be looking at 2020.
Already mortgage rates have actually dropped a little bit, and I think they're planning on dropping mortgage rates at this point. But the problem with that is if you drop once the mortgage rates drop, that's in itself is going to cause a drop in the value of homes, most likely. It's very weird how that works out. But
So you're going to take a further hit in what you have into your house right now. The interesting part we talked about mortgage demand dropping off 2% from the week prior. It's picking up on adjustment.
something to note here that some people might not understand, when you see this 5/1 year ARM, this is what most commercial loans are at. Most of the time you're at a 5-to-1 or a 10-to-1 year ARM. What that means is that you have a fixed rate for 5 years, and after that it's an adjustable rate. And so anybody who purchased a home 2 years ago or in the last year, a commercial property, and it was really maybe they put it under at like 4.5%, but it was a tight deal, meaning that they put it under contract at a bad price, and now their rate's gonna go up 2 or 3%, it'll make it to where they're underwater. And so you're gonna have a lot of commercial deals, especially in the next 2 to 3 years. If these rates don't adjust, you're gonna have a bunch of opportunity in commercial where investors aren't gonna be able to afford their asset any longer, and they're gonna have to sell at a loss. So something to keep in mind.
Adjustable rate mortgages, people taking a bit of a risk on those 5-year fixed. After that, you're subject to market rates, and that we are seeing quite a big demand, people betting on rates down the road. I think in this environment, probably worth the chance for a lot of homeowners.
Yeah, and we talk about the slowdown that we're seeing in the U.S. Obviously, this is also true on a global scale, and it's interesting. UBS was also out with a recent report highlighting what they're calling the riskiest cities for real estate. So Toronto actually topped that list. Frankfurt, those were the top 2. Miami was the only U.S. city in that top 10 list at number 10, which I found a little bit interesting, right? Risky.
Not buying it. Miami will stay hot. They might lose a few percentage points, but we are flocking to the no stadium.
Yeah. Miami's not going to take any a drastic hit, for a lot of reasons. Number one, their governor, not their governor, but the mayor rather of Miami is a fantastic mayor. It's all going to really depend a lot on obviously elections, like anything. If DeSantis stays in Florida, maybe DeSantis will take a presidential seat. Who knows? But as long as the mayor stays sitting, I'm not really sure, to be honest with you, with the mayor of Miami when his term's up or not. I just know a lot of people down there absolutely love the new mayor. And between him and DeSantis, that southeastern region is definitely a really desired location right now. And Miami just continues to explode. I know a lot of investors that have moved to Miami, especially the single guys moving down there. A lot of the families are moving to the outskirts of Tampa or Gainesville or my area up here in the Panhandle. So I don't see Florida getting hit like super drastically. But across the market, like the big thing that I would want people to understand is that at the end of the day, if you're a real estate investor, none of this stuff really matters. It creates more opportunity if you're smart, but more than anything, what you want to be able to understand is that if they're saying, okay, price might drop 10% over the next year, that just means that you need to get stuff under contract for 10% cheaper. That's it. That's all it means. And you should already be doing that. You should already be saying, hey, I need to make sure that I'm at least getting stuff under contract for less than build cost. That's advice that somebody that I respect told me, and it's a really great advice. If you can get anything under contract for less than build cost minus repairs, like you're probably in pretty good waters. And then on top of that, just make sure you're making your offers. Like you're not going to be able to, go off this selling to hedge funds, locking up for 10% less than market and then selling to hedge funds for 5% over market. That's just not going to be the market that we're in. And so you just got to change your ways and understand truly how to get properties at discount and how to follow up with leads and how to make your company run like a well-oiled machine. And shameless plug, that's what REISift is all about, right? And so I really like this video. It's great. I think we should definitely do more of these. Good idea, Mason. So if you guys have any questions on this, comment below. I want to know what your opinion is, and we'll do more of these. Later.